Driven Brands is surging on its IPO debut. Leslie Pickard joining us now with that company's CEO in a CNBC exclusive interview. Les, take it away.
Hey, thanks, Scott, and thank you, Jonathan Fitzpatrick, the CEO of Driven Brands, which has Maaco and Meineke among its many brands of car service companies. Stock is up 30%. You priced above the range. We're able to raise $800 million. So I just want to kind of level set with the audience. Can you help bring us into the room, bring us under the hood, so to speak, of what the conversations were like with Morgan Stanley or other bankers about the decision to go public, why you chose to do that, and why you chose to do that right now?
Yeah, thanks, Leslie. Look, it comes down to a dream that I've had with my awesome private equity sponsors for 5-6 years. We believe Driven Brands will be a great public company. We're long-term employees, long-term sort of horizon as we think about the business. We're 83% franchised. Our franchisees are incredible folks. And, you know, we will do really well in the public market. So this was a dream that we've been working on for multiple years.
In some ways, your story is a pandemic story, like many of the companies that have gone public recently, in that a lot of people are buying cars in the pandemic. A lot of people are buying used cars in the pandemic that then need to be serviced. Additionally, you were deemed essential businesses, and most of your affiliations were able to stay open during the pandemic, during the lockdowns and so forth. I'm curious, how sticky are the tailwinds, and what is some of the data analytics that you've obtained from your franchisees and your own shops? What have they informed you about the state of the consumer right now?
Yeah, look, our industry is awesome, Leslie, right? It's a $300 billion growing industry. Driven Brands has delivered 12 consecutive years of same-store sales growth. Our franchisees did amazing in 2020. You know, they did stay open, but our franchisees are true owner-operators, so they stayed open and they did great. So we bounced back pretty quickly in terms of, the short-term impact in Q2. Sequential growth Q2, Q3, Q4. So really pleased with how 2020 shaped up. And then what's unique about Driven Brands is we collect incredible data about our customers from both our company and franchise stores. Unlike a lot of other retailers, our customers willingly give us their name, their address, their phone number, their email address, and we have a pretty sophisticated data lake where then we can sort of mine that data and use it to improve both our franchisees and our company stores.
And what is that data telling you right now about the consumer and the health of the auto market in general?
You know, Leslie, we provide auto services, right? And they're essential needs-based auto services. I think the other thing is our core customer has our retail core customer has a $60,000 household income. They drive cars that are 9 years of age. They have about 100,000 miles on it. So our core customers have been driving, throughout 2020 and will continue to drive for many, many years to come. So our core customer has been, driving and living their life and getting their cars fixed and serviced. So we feel really good about, how we performed in 2020, but more importantly, how we're going to continue to perform in the future.
Well, let's talk about the future, because on this show and across CNBC, we've talked a lot about electric vehicles lately. The public markets seem to not be able to get enough of both electric vehicle companies and companies exposed to the electric vehicle arena. I'm curious, how does your business fit into that, especially as, your core competencies are in areas like oil changes and certain car parts? Are you positioned to capitalize in a world that could, be moving more into the direction of electric vehicles in the future?
Yeah, look, it's a terrific question and one to get all the time. But, again, our core customer has this household income of $60,000. Their cars are older. They've got higher mileages on them. So they're typically not that sort of EV adopter. I think the other thing is that the numbers don't lie, Leslie, right? We've got 275 million vehicles on the road in the United States today. The average age of those vehicles is almost 12 years of age, right? So that pool of total addressable market for us continues to grow every year. So we don't see any material impact in our core business, for multiple years, arguably decades, just because of the size and scale of our total addressable market today.
Another key characteristic of Driven Brands is that it's essentially a byproduct of a roll-up strategy. The company has done 40 acquisitions over the last 5 years. Where would you say you are in that roll-up strategy cycle? Do you see yourself doing more deals as a public company or fewer deals as a public company?
Yeah, we've been super successful with our M&A strategy. And look, it's helped us get great people in our organization. 3 of our leadership team have come from those acquisitions. We get share. So, M&A has been a big part of our past. We've not built it into our future projections. So, we will be a double-digit revenue grower, a double-digit EBITDA grower organically. But given that, we've been super successful, we will continue to be sort of opportunistic and look at M&A opportunities when they come along. But again, not in our future financial projections.
Well, now you do have a public currency to do that. DRVN is the ticker, now up 30%. Jonathan Fitzpatrick, CEO of Driven Brands, we appreciate you joining us today.